let's discuss policy loan interest and how it relates to implementing the infinite banking concept. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our EncycloMedia series, we're going to address policy loan interest. Now, when it comes to whole life insurance that's been properly structured with a mutual company that pays dividends for the purpose of becoming your own banker, this policy gives you the contractual right to be able to access capital via policy loans. So as cash value accumulates in your policy, you can leverage that cash value. You can borrow against that cash value. So your premiums continue to grow and to compound uninterrupted. That creates a death benefit that inherently then creates a cash value, and that cash value grows and compounds, becomes more efficient over your whole life as well. Now, you can borrow against and you can leverage that cash value. So without interrupting the growth of your capital via premium dollars, you have a contractual right to access from the insurance company's general funds, their general account. So not interrupting your funds that have been premium dollars paid in your contract, but you can borrow against the value of the cash value that's built up in your policy from the general fund of the insurance company. And when you do, every contract, and you should be familiar with your particular contract, the particular company or companies that you own policies with. I own policies with multiple companies, and there will be in your contract, of course, either a fixed or a variable interest rate, but the insurance company will charge a rate on the loan that you make. And that policy loan interest, I will say, for me, has its certain spot of importance when it comes to how I would build out a hierarchy of dollars flowing to and from an insurance policy. Let me tell you what I mean by that. First and foremost, of course, I want to pay my regular, scheduled, ongoing premiums, whether that's monthly, annually, semi-annually, quarterly, however I'm doing that for the different policies. I want to pay that regular, scheduled, ongoing premium. Number two, the second priority is if I have extra capital, extra money that I can fit into that policy, and with the properly structured policy, there will be flexibility to pay additional premium payments. That'll go into the paid up additions rider into the policy. That's the second priority that I have. I want to fit as many dollars as I can into the policy above and beyond the regular scheduled ongoing premiums. Now, third, and again, this is for me, if I have an outstanding loan balance with the insurance company. So let's say I've been paying off debt, or I have financed something, or I've leveraged capital from my policy for an investment, whatever the case may be. When I can, and after I've covered those first two priorities of paying regular scheduled premiums plus any additional premiums that I can into the paid up additions rider, I would like to pay the policy loan interest, meaning just the interest that is being charged for the loan that I have taken out. That is a priority in that order for me. And then fourth, of course, ultimately, and time frames matter, whether we're talking about the span of 1 year versus 50 years, okay? Either way, the principle is to be an honest banker. So the fourth priority for me would be to pay all of that loan back, to refill the reservoir. So to have fully funded the policy with its regular scheduled ongoing premiums, any additional premiums, pay the policy loan interest year over year so that does not compound into the loan balance that I may or may not be running on that particular policy. I do want to pay the policy loan interest so that does not compound into the outstanding loan balance. And then ultimately be an honest banker, completely repay, don't steal the peas, repay, as Nash would say in the book, don't steal the peas, don't go out the back door in his grocery store scenario. If that's new to you, I'm encouraging you to read the book, Becoming Your Own Banker. If you've not read that, start there. But to be an honest banker means to pay back the loan just like you would have to a commercial bank, pay that back plus interest. And then that actually ties back into putting extra premiums into the policy. So again, that hierarchy is pay ongoing scheduled regular premiums. Number two, I want to pay any additional any additional money that I can into the policy. Number 3, I do want to pay the policy loan interest. And then fourthly, I want to refill that reservoir. I want to pay back the policy loan completely. And again, any interest that I would charge myself, because I'm the banker. Remember, do you have to pay policy loan interest? No. Ever? Never. Do you have to repay a policy loan? No. Do you have to do it this way or that way? No, you are the banker. This is a piece of private property. You own it. Again, that doesn't do away with me saying be an honest banker. If you'd have borrowed money somewhere else, you would have paid it back plus interest. Do your money that way. Treat your capital in that exact same way. But how beneficial is it to be the one in control of those repayment terms, deciding what pace, how much interest additionally would I like to add to this? When am I going to pay this back? How am I going to pay this back? Am I going to pay this back? And then, of course, time frames according to your plans come into play. So that's how I would prioritize dollars to a policy. And I hope that's helpful for you to understand what part policy loan interest plays in your plans. In being an honest banker, even if you're not repaying the full loan back because perhaps you're just moving on to the next debt, if you're in a debt recapture mode, you're not ready to refill the reservoir yet because your debt's snowballing. You're just moving to that next debt. Great. If that year has come by, consider paying that policy loan interest. Again, don't have to, but consider paying that loan interest if you can, so that doesn't compound into the outstanding policy loan balance that you have. So I hope that this has been helpful. If you have any questions, make sure to put them down in the comments section below. Or if you'd like to learn more about how to implement the infinite banking concept, then I have a free presentation on my website that you could check out before booking a free consultation call with me. You can reach me at durhamtalents.com. This has been a great pleasure for me. Hope you have a great day.